Inside days are inside bars. What are they and how to trade them? If that's the information you're looking for, you've came to the right place. FOMO Trader here. We're going to show you guys exactly how to find, locate, and trade inside bars or inside days. First off, we're going to start with the definition directly from Investopedia. What is an inside day or inside bar? Inside days refer to a candlestick pattern that forms after a security has experienced daily price ranges within the previous day's high-low range. That is, the price of the security has traded inside the upper and lower bounds of the previous trading session. It may also be known as inside bars. Inside days may indicate consolidation or lower price volatility. Inside days may be contrasted with outside days, in which a day's candlestick chart exceeds the bounds of the prior day's high and low. I will be covering outside days in a separate video. To show you a visual example of what we mean when we say inside day or inside bar, take Amazon here on the daily time frame. Your first bar here indicated in blue is what I would like to call the mother bar. Its high of 136.32 and its low of 132.85 is higher and lower than the next day's high and low. So the bar is inside of the prior day's high and low. 136.32 high is greater than 134.99 and 132.85 is lower than 132.95. So this price is inside of the prior day's price action. Now that we understand what inside bars are, we need to be able to find them so that we can trade them. The first place I would like to go over on how to find inside bars or inside days is by using Tradie Ticks at www.tradieticks.com. It is a great platform for option traders and stock traders. If you would like to sign up for their 7-day trial and receive 10% off your subscription, please use the referral link located in the description to this video. So the first thing we would do is sign into our Tradie Ticks profile, and it would bring us to the stock market dashboard. Then we want to go to the navigation pane and pull up Scanny underneath the Scanners heading. What Scanny is a comprehensive swing trading scanner that looks at thousands of stocks to find the best swing trading signals for you. It is updated every day 2 hours after market close. So in order to find inside bars, here is what I personally do. I start by filling out minimum volume. I go for 1.5 million. This is just my personal preference. You can adjust this as needed. I make sure optionable is selected, and then I turn on inside day under scanner signals. Then I sort by volume from greatest to least, and as you can see, it populates a list of inside days on the daily time frame. So the first one we have is Vail, and if we come back over here and we go to Vail, we can see that the close from today is inside of the prior day's high and low. The second ticker it brought up was Snap or Snapchat. If we pull it up, we can see that it also had a inside day form inside of the prior day's high and low. Now that we've gone over how to scan using Tradie Ticks to find inside days or inside bars, I would like to show you a free way using ThinkOrSwim by TD Ameritrade. The shared script URL is in the description to this video. The way we are going to open this script is open your ThinkOrSwim software, click the Setup button, open Shared Item. You're going to paste the URL from the description of this video, hit Preview, and it should import item as Inside Day Scanner FOMO Trader 87. And then you want to check the box that says Open Shared Items after I press Import. Then that will open the scanner itself. It is going to bring up the scanner, and it should look like this. There is only 2 filters set in this scanner. Well, actually 3. So you are going to scan in all optionable. we have stock volume of a minimum of 1.5 million, and then we have a custom study of finding the inside bars themselves. This is basically saying that the high of today is lower than the high of the previous day, and the low of today is greater than the low of the previous day. So now we are going to hit scan. We are going to make sure we are sorted by the volume column from greatest to least, and this is going to show all of our inside bars from the daily time frame. Now that we can successfully locate inside days, we need to know how to trade them. I'm going to use aapl for an example and use TradingView's replay function to let this play out and show you how I would have effectively taken this trade. So the first step you want to do is be on the daily time frame. You want to mark the high and the low of your inside bar candle with a horizontal line or a horizontal ray. Then in a live environment, you would switch to a lower time frame and the market would open or is already open. But since the market is currently closed, we are going to use the replay function. So I'm going to hop back to the 5-minute time frame. And as you can see here, indicated by my horizontal ray, high and low, that I have marked out my inside day levels. So now I'm going to hit the replay function and play this back as if it were live. So we're going to hit play. Market opened. We wouldn't want to take that trade because it was in the very first 15 minutes. Now we want to wait for a confirmed break above or below our high or low inside bar levels before being interested in this trade. So we got close to breaking out there but didn't quite make it. So now I'm going to pause it right here. We have broken above our inside day high, but this wouldn't be a confirmed entry. You would only want to enter if the body of the candle broke above your high. And as we can see here, when the candle closed, we only had a wick close above that level. This is very important because if only a wick closes above that level and you were to enter, you could automatically be in the wrong side of the trade because it is not a confirmed breakout. It is a false breakout. So make sure that the body of the candle closes above that level or below that level. So as we can see, in the very next candle, our body closed above. So we got to close above right here with this second candle. That is a confirmed breakout above that high. That would be my entry. I would wait for this 5-minute candle to close and then I would enter this trade. Now that we've seen an upside example, we're going to look at a downside or a breakdown example for an inside bar. So the first thing you want to do is start on the daily time frame. We want to mark our high and our low just like we did with aapl. Then we would switch to a lower time frame. I am going to use TradingView's replay function again because the market is currently closed. So I have marked the high of the inside day and the low, and we can see it on the 5-minute. So now I'm going to hit the replay function, and we want to make sure that we don't trade in the first 15 minutes after market open. We want to let the bulls fight the bears because there could be a lot of false breakouts and breakdowns. And we also want to wait for a confirmed breakdown and make sure that the body of the candle has closed below our low if we are going to play a downside or for the upside. So we're going to hit play. Here's our first 3 or 4 candles, which come right when market opens, and then we bounce back up. So now we want to wait for a confirmed break below the low of our inside bar level. Since we are inside of our range, there is no setup, there is no trade when using this strategy. So now we're making a move to the lower side, to the lower level. We're about to break below here. All right, we can see this first candle did break below our low, but only once the candle closed, only the wick closed below that low. So that could be a false breakdown, and we would want to wait for more confirmation before entering the trade. So we wait for our next 5-minute candle to finish forming and see how it closes. This candle was built and closed, but a good majority of the wick and only a little bit of the body is below that low. So me personally, I would not take this trade, as this is a doji candle, meaning it is an indecision candle. The bulls and the bears couldn't decide who the winner was, and it is typically a reversal candle a lot of times. So I wouldn't have entered on either of these two breaks. I would have waited to this third candle where the entire body and the entire wick is below that level, and I would have gone short on Microsoft or entered puts. And if we hit play and see that we entered there, we would have gotten in around 269.60, and this thing would have gone all the way down to about 266, even lower. So here's market close right at 4 o'clock. So we got in here, we rode this thing all the way from 266.60 area down to the low of 264.63 in an options land that would have paid really well. But FOMO trader, once an inside bar breaks out to the upside or breaks down to the downside, how do we know where to set our take profit levels and our stop loss? I do this very simply by using the power of Fibonacci. So this is how I would do it. I take my Fibonacci drawing tool, and I am going to draw my Fibonacci from the low to the high, the exact levels of the inside bars. So that's going from low to high, from 138.34 to the high of 141.79. And this would be for upside price targets. Now, if we hit play and let this thing play out, and I'm going to pause it right here. So we have a confirmed breakout on our second candle here. The body is closing above our inside bar high. We would enter calls or go long. Our first price target would be 142.13. Our second price target would be 142.60, and then 143.10, and so on and so forth. And our stop loss would automatically be set by the Fibonacci as well. For my price targets, for Fibonacci, I typically use the 38.2 to the 78.6 as my 4 price targets when using this strategy. And then my stop loss is always set to the 23.6. So if we set up our risk to reward and we look at this, and 144.50 would be our final price target, and our stop loss would be 140.97. That is going to yield us a 1 to 3.47 risk to reward ratio. You are risking 1 for the chance at making almost 3.5. That is very good. I don't care what kind of trader you are, that is a great risk to reward ratio. Now, if we go back and look at Microsoft, since this is to the downside, let me go back to the replay function here and go back to this day and time. Switch to the 5-minute time frame. So we have our high and low marked. And we would draw our Fibonacci from the high of our inside bar to the low. So our high is 273, our low is 269.61. Let me extend this to the right a little bit more. Then I am going to hit play. Let me extend this some more. 61. So we would wait for a confirmed breakdown below our low of 269.61, which happened right here at this third candle. And then our price targets would be our extension levels of the 10%, 23.6, 38.2, 50, and so on and so forth. But if you'd like to follow my exact strategy, my price targets would be the 38.2 all the way down to the 78.6. And my stop loss would be my 23.6 retracement level. So if we enter this and risk to reward, this is 270.41. For our stop. Our profit target would be the 78.6 of 266.95. And our entry was at this third candle was 269, in between 269.61 and 269.27. So let's just say 269.40. That would yield us a 1 to 2.43 risk to reward ratio. So stop loss is using the Fibonacci retracement, and our price targets are set by the extensions. Now we know what inside bars are, how to scan for them, how to trade them, and how to set our take profits and stop losses. Let me tie it all together for you and show you how I would prepare for the next day. My first step would be to fire up Tradie Ticks, go to the scanner, minimum volume of 1.5 million, optionable selected, and select inside day, sort by greatest to least in the volume column. Then I would look at the names that pop up. One that I like in this list is HD or Home Depot. So I'd go back to my charting platform and look at Home Depot. Our first step would be to mark the high and the low of the inside day candle. Switch to the 5-minute time frame. So our first thing to note is we would be waiting for a break above that high of 309.96. So we would set an alert for 309.96 saying go long our calls, and then we would draw our Fibonacci from the low to the high. And to get these coordinates exactly right, so 305.83 to 309.96. Then we would look at our take profits and our stop loss. So now, this trade, the way we would set this up is we would say HD over 309.96, and we would go long our enter calls. Our price targets would be your Fibonacci extensions from the 38.2 to 78.6. So we got 311.54, 312.02, 312.51, and 313.21. Then our stop loss would be our 23.6 retracement level of 308.99. And then if we fire up our risk to reward here, so we would enter on a break of 309.96. Our final price target would be 313.21, and our stop loss would be 308.99. That is going to yield a 1 to 3.35 risk to reward ratio. So this trade would be valid once we see a confirmed break above 309.96. You set the alert and you wait for it to happen. Now we could also look at the downside potential of this trade. So we would want to delete everything that we just created. We'll leave this here. So now we're going to set an alert to the downside of 305.83. And we're going to say go short or enter puts. And then once that level is broken, we will get an alert automatically. So now we are going to take our Fibonacci and draw it from the high to the low to get our price targets and our stop loss, 309.96 and 305.83 to get that exact. Our take profit zone would be your 38.2 to 78.6. And then our stop loss would be your 23.6 at 306.80. So risk to reward on that, we'd look for a break under 305.83. Our final price target would be 302.58. Excuse me, and our stop loss would be 306.80. Same risk to reward ratio as the upside. So we'll come back in here into the text box and we'll do Home Depot under 305.83. We're going to go short or enter puts. Price targets would be our 38.2 to our 78.6 to the downside. So that would be 304.25, 303.77, 303.28, and 302.58 with our stop loss of 306.80. So now we have prepared for the next day and set our play up, and we basically just wait for it to happen. That is going to wrap up my video on how to trade inside bars. I would like to thank you for tuning in, and I hope you found my video very valuable to your trading journey. If you did, please like, subscribe, and share my content. I would greatly appreciate it. Thank you, and see you again next time.